The next trade is PayPal. And it reminds me a lot of Vivid Systems, where we have an IPO and then a long-term accumulation range. And we could go through this, but I think that you could just do it on your own and just to go through my labeling right here and to identify specific events. I really liked the consistent improvement on the trend definition with higher highs and higher lows. Also, this rally right here, and especially the latest run, the latest phase of this rally, also had the character that was different from any of the rallies that we had before. The localized climactic run suggested that we're going to have a reaction and the possible backing up action if the price stays at the higher level of the resistance that was created by the highs in phases A and B. And then that's exactly what happens. We're going to look into this trading range on the daily, and then look what happens next. If this is our area of the stepping stone reaccumulation at the higher level, then we definitely have a very well-defined bullish characteristics on this next rally. And we would be expecting another stepping stone that probably would have a slightly smaller duration than the previous range, just because the level of the supply is so different at this point of time. We are encountering some resistance on these trend lines, but the stride of the trend could easily change at this point of time, and we probably should expect some kind of continuation. Let's look at it from the daily perspective. And again, I really like phase D action here of the major backing up action that we're having here. It has a complex structure here, a trading range of its own, very clearly defined phase C was the second point of fear, third test. Again, those are, if you guys are not familiar with those, refer to the advanced Wyckoff trading course that we run on a consistent basis. So just ask me when the next session is going to be, and I'll let you know if you want to sign up. Specifically, this area right here really is very interesting, and obviously this was missed, so I wasn't really looking at that particular stock at that time. But there are a lot of characteristics of really healthy absorption and then a really healthy leadership, where institutions are still potential buys even as the stock goes up. So going into a more localized reaccumulation right here, we see that the selling that takes place is actually not significant. And only for these 2 days where the price actually reacts to the downside, we don't really have a lot of selling after that. Whatever selling comes later on is of lesser quality, and it doesn't produce the same type of the result than from 1 to 2. Also, looking at this whole rally and the way how the change of character shows the beginning of the reaction, we see that there is inability of the price to make a more significant reaction to the downside, suggesting that supply is of poor quality, supply is somewhat exhausted, especially in this area, and it gives us the timing that the price would be ready to leave this range and maybe create a slightly different stride for the uptrend. So, and this is where position is being established right here around this area. So that's the first point of entry. We are going into the earnings event, into the next rally, and I like the pre-earnings run. It shows some strength. Going into the consolidation right here, we see how supply is contracting, yet supply is somewhat at the higher level, suggesting that maybe we're not necessarily going to have such a strong sentiment to the upside on the earnings day. And look how it happens. It gaps up, but from the open to the close, we have a negative relationship here. Also, during the intraday session, we are actually covering the whole gap and then going up again. So and that's on the background of the increased effort that suggests increased supply, and the way how the result acts relative to the previous analogs, where on earnings days we're gapping up and kind of holding there on a big increase in effort, and then testing more successfully. That suggests that we probably have a better supply at this spot than at the previous earnings days, and we're probably going to consolidate at this point. So indeed, we go into the consolidation, and then we are just looking for the areas where absorption takes place, and we want to make sure that it's going to be somewhere on the springboard. So we open in the second position right here, and I thought that was a really good place as well, considering what happens next. The price still resides on the demand line right here, but this rally suggests that momentum is coming back into the stock, and we could expect maybe a slightly better move than whatever we have had prior to that. There was also another opportunity to open a position around this area right here. I don't necessarily recall why I didn't open that position. My goal was to go into the next cycle of earnings and to see what kind of day we're going to have there. Are we going to have a day like this, more similar to this, or a day like this? And obviously, judging by what has happened, we're seeing a really good pre-earnings run, which suggests a bias to the upside in the majority of cases. This reaction right here, where institutions are hedging against their positions before the earnings day, could have produced a little bit of the anxiety, but look at where it actually goes. It reminds me of all of the reactions to the demand line that we have had before. So that suggests that we still need to keep that position. The earnings day itself actually acted really well, but I was really close to the expiration. I believe that was in November, so I had to close the position on the what seemed at that time most favorable structural point. So the majority of the position has been closed on the earnings day, and then a small portion of it was closed on the next attempt to rally into the oversold condition. Now, both of the entries were not necessarily the most efficient, the most optimal points of exit for us. I think that the most optimal point of exit was this bar right here that has elements of the climactic action on the localized increase in effort, and also the gap in action. The true range is quite large, and we go into the overbought condition right here, which is very favorable for any exit, reversal, change of character type of setups. So that probably is the only thing that I would say it's the exit. Could have stayed in this position slightly more. So we're kind of losing here about $5. Another point of exit could have been around this area, around the overbought, and specifically on this bar on the intraday, you could have exited. I think that this is a really good scale out exit there, considering that you might have exited here, here, and then here. So this could be your last exit with the smallest amount of shares.